Steve Dunn, gold is back in a big way in 2016. ETF Securities ETF, the SGOL, is up around 18% so far this year. Why don't you explain gold's resurgence?
Greg, thank you for the time this morning. Yeah, gold, certainly a tale of two cities, right, from 2015 to 2016. So if you look at the first 2 months, I think there's a couple factors that have come back into play. One, you've seen volatility in the marketplace, right? And so if you look at 2013, 14, 15, not a whole lot of volatility in the marketplace. Strong equity markets. Those markets tend not to be very good for gold. You look into the first part of 2016, January, February, lots of volatility in the marketplace. And people were starting to look to gold as the safe haven trade again. And so that's where you've seen the flows really come from. There's lots of different ways that people use gold, but I think this one has been more geared towards that safe aspect to provide some diversity to the portfolio, because as we've seen, the equity markets have had a tough go.
Well, there are actually more ways people can use silver, because it's also an industrial metal as well as a precious metal. Your SIVR, once again, ETF Securities, it's up around 8% year to date. Can you talk about the case for silver?
Yeah, silver is a little bit of the baby brother of gold. They tend to move in lockstep, from a flow perspective. Silver obviously has some uniquely different characteristics than gold. It's used in things like electronics. Obviously, things like jewelry and things along those lines come much more into play. So you get some characteristics that are slightly different than gold, but silver does some of the same types of nice things that gold does from a portfolio perspective. Diversification. It helps you from mitigate some of the challenges that we're seeing in the market as it relates to volatility. But they also have some characteristics like industrial metals. So they're heavily impacted by things like what's going on in China, some of the demand that's going on in that space, some of the demand that's going on in the electronic space, or lack of demand. So you get a little bit of characteristics of both gold as well as some other metals.
All right. Speaking of other metals, here are the two that confuse people. So far this year, palladium is down, but platinum is up. People confuse these a lot. So talk about the need for these in people's portfolios, because there's an environmental aspect as well.
Yeah, and so, the real story behind both of those metals, and so obviously folks are aware of platinum from a jewelry perspective, but if you look at the role that platinum and palladium really play, is much more industrial in nature. And so if you drive an automobile and you have emission standards, platinum and palladium play a role in most automobiles, right? So whether you're looking at gasoline engines or diesel engines, they play a role as part of the catalytic converter, right? And so as emission standards are increasing, you're going to see more and more of those metals used in that process. The challenge so far from a performance standpoint is you had a couple things that were going on. You had some concerns in China as it relates to the economy and continuing need for automobiles, right? So some of the auto sales have been challenged. The second component that comes into play with both of those, those metals is supply issues, right? And so what you've seen a lot in the metals marketplace is somewhat of an oversupply in that marketplace. And that's caused some challenges from a price perspective. And then sort of the third thing that came into play last year, obviously, was the Volkswagen issue in Germany. And that played a huge role in some folks getting concerned specifically about the role of those metals in the catalytic converter. So some of that is still yet to come.
All right, and then finally, why do I want to buy the underlying metal when I can buy the miner now? You look at the GDX, which tracks the miners. It's another ETF. It's a market vectors ETF. That's up around 40% year to date. You're getting great leverage when you get for the miners. So why do I want to own the metal?
Yeah, the miners have been a great story, so far for 2016. We have some concerns in that space. We still are a believer of holding sort of the physical metal for a couple reasons. One, what you're starting to see is a lot of the CapEx starting to come off in the miner space, meaning that they're spending less money, which intuitively would tell you, hey, isn't that a good thing from a bottom line perspective? But these things tend to catch up to you in the long run. There's also a lot of leverage in that space. There's a lot of debt in that space. And so our concern is if you're looking at from a risk parity type of trade of the metal versus the miners, there's a lot more risk associated in the miners currently. Performance has been really strong, but we would caution people, be aware in that miner space of that additional credit risk exposure that's going on there.
All right, well, thanks a lot, Steve.
Thank you.
And thank you for watching The Street.